Hello, welcome to Save U.S. Taxes Legally. I want to teach as many U.S. investors, U.S. business owners, U.S. Franchise owners, U.S. entrepreneurs, and 1099 income earners how they can save taxes legally. Most people have never heard of the Spendthrift Trust. It comes from England way back when King Henry VIII, that famous king who chopped off his wives' heads, started the Church of England. He went to go tax the lords and ladies of England. They went back to the 12th century, the Magna Carta, and said, oh, no, 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 King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. Our current tax structure went into effect February of 1913. And the super rich families, the Rockefellers, the DuPonts, the Carnegies, and the Kennedys, made sure they could save taxes. Well, if they can save taxes, we can save taxes. So let's get into this. I'm going to share my screen. My name is Sally Gimmon, and I'm the owner of the trustisyou.com. My whole goal is to teach you how to save taxes. You're going to save, I should change this, you're going to save federal and state income taxes year after year, generation after generation. You're leaving a legacy. That's an important thing. Your information is going to be completely private. This is on the federal level, not on the state level. The trust cannot hold any LLCs, S Corps, or C Corps. We highly suggest you shut them down. 40% of LLCs, S Corps, and C Corps get sued every year because anybody can research them online 24/7. And number three, I can't stop you from being sued, but all lawsuits become frivolous and go away. And then I don't have the fourth one on here, but I have run into this several times. If you're 65 or older and on Medicare and making too much money, it does away with the IRMA surcharge on parts B and D of your Medicare. It's an amazing document. So let's go to the next page, maybe. Now, this is the 2026 federal income tax brackets. I want to show you that there's 7 different layers from 10% to 37% and 4 ways to file your taxes. Most expensive way is single. Then it's head of household. You're divorced but have children 18 or younger living in your household. Then it's married filing separately. And then the cheapest way is married filing jointly. Check this out, ladies and gentlemen. Married filing separately is matched exactly the same as single since January 1st of 2025, all the way up to 35% tax bracket. After that, up to 32% tax bracket. After that, it's still less than married filing jointly. If you're married and you can do this, please file married filing jointly because it's the cheapest way to file your taxes. That you don't even need a spendthrift trust for that information. Now, to get the elephant in the room, I know what you're asking. Why hasn't my CPA or my financial advisor told me about this? That's a great question. There are over 1 million active attorneys in the United States. Only 4% are trust attorneys. A textbook trust attorney study in law school is called Scott and Asher on Trusts, 5th edition. It's also in Black's Law Dictionary. If your CPA or your financial advisor says, ooh, the IRS doesn't like the IRS Tax Code 643B, they do not like the Irrevocable, Complex, Discretionary, Non-Grantor Spendthrift Trust. Yes, they wrote a memo on August 9th of 2023. If your CPA or financial advisor tells you about this, say, can I have the 15 pages or can you give me the link for the 15 pages? The PDF document that's available online on the bottom of every page says this is not tax information. Only Congress can change the tax code. The IRS can say as much as they like about they don't like the 643B, but they can't change it. So these 5 elements are super important. They must be part of the Spendthrift Trust. Irrevocable means it goes from generation to generation to generation. You're leaving a legacy. The Rockefellers Spendthrift Trust is called The Office. It's 7 generations old, and there's over 400 people under the same EIN, employee identification number, but each individual family files a separate 1041 tax return. Same EIN number, but their money is not commingled. People ask, is it hard to get things in or out of the trust? Absolutely not. I've moved a car in, I've taken a car out of it. I have 19 real estate properties in my beneficial trust. I have 3 businesses in my business trust, easy peasy. When you start the Benson Financial Trust, we are going to teach you how to use the trust correctly. And you're always going to have myself, Anna Maria, and other people there to answer your questions. Second element, complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. The Benson Financial Trust inherited a trust that it will turn 365 years old in 2026, before we were a country. Again, like I said, the tax code only went into effect in February of 1913. With this trust, 97% of the trusts sold in the United States are what my mom and dad had and what Susie Orman talks about on PBS television. The family trust, the living trust. There's nothing wrong with the family trust. It's designed to avoid probate, and then it dissolves. That's exactly what happened to my parents' trust that was called the Gimmon Family Trust, real original name. What I'm teaching you here today is not your mom and dad's trust. This is what the Rockefellers, the DuPonts, the Carnegies, the Kennedys, our current president's father, Robin Williams, many rich people have had. Discretionary. Whoever's the trustee or trustees can make the rules and regulations for all the beneficiaries, from while they're alive and also from the grave. There's no infighting, there's no contesting the will. One of my clients, a husband and wife with 4 apartment buildings in Los Angeles, had allowed their daughter to live in one of the apartments rent-free, but she has a drug problem. So they're requiring her to do 4 random drug tests per month, and she actually sued her mom and dad in federal court. The judge read over the trust, and he said to her she has 2 options. Option 1, move out, start paying her own rent, or option 2, pass the drug tests. She's still in the apartment. I do not want to be invited to the Thanksgiving dinner. Non-Grantor. When you start this trust, you're going to have someone who will never be a beneficiary, who will never be a trustee, sign up to be the grantor or the settlor for the trust. This makes the trust 100% private. Then they will sign themselves away, same function, but you will need their social security number. If you can't find someone to do this, I have done this for many of my clients. It's no big deal. It's just two different pieces of paperwork, and it makes the trust completely private. When someone tries to research it, they'll know it's based in Texas, and they'll know who the settlor or the grantor is, not you personally. And then the 5th element, the spendthrift. This has been in front of the United States Supreme Court on 2 separate occasions. It has passed both times. I have 2 pages of case law. If you need to want to research this to your heart's content, just send me an email and I'll send you the case law information. Now, the business trust is for all people making 1099 income. You could be a business owner. You could be an entrepreneur. You could be a franchisee owner, a 1099 income earner. Google says that 32% of W-2 income earners do have a side hustle that is 1099 income. Again, if you have to pay your own taxes, I can help you with the Business Spendthrift Trust. This is an actual client of mine in Rhode Island. Yes, he has a sub shop. The husband and wife, they filed married jointly. They made $985,000 in 1099 income for 2025. In federal taxes, they got to save $286,614. In Rhode Island state income taxes, an additional $59,001. So for all of 2026, they're going to save $345,615. That's their money. They can put it back into their sub shop. They could open a second sub shop. They could pay off their mortgage. They could buy a new vehicle. They can take their family on a well-deserved vacation. They have 3 children. They can set up college funds. They could give to their favorite charity, or they can save for retirement. When you start any of the 5 trusts that Paul Benson wrote, 2 major trusts I'm going to talk about here are the Business Trust and the Beneficial Trust. There's the Mineral Rights Trust. There's the Charitable Trust. And then the Senior Trust for anyone who's over 65 incapacitated. Each trust is going to get their own EIN, or employee identification number. We're going to give you a letter to the bank of your choice. You're going to open up a new bank account. You're going to have the receivables go into that new bank account. You're going to make all your payments, maybe for your mortgage, for your electricity, for your lights, for your water. coming out of that bank account. You're going to file a 1041 tax return. We're going to introduce you to a CPA who will do it for you. 100% your decision. If you're going to use the CPA, we vet it, or if you want to use your own CPA, that's your choice. And then the money you save, no longer paying federal or state income taxes, you'll have access to that by a debit card or going into the bank and getting cash out. Year after year, generation after generation. Again, this is just in Rhode Island, one of my clients. Now, my personal story, so you have it. My watershed month was October 2018, when three major things happened. Number one, my oldest nephew was getting married in North Carolina, and I was requested the Friday, and they denied me that. My car got hit by a car that ran the red light, and he hit me. So I had to have two mortgage things. I had a mortgage, I had graduate school things, and then my mom and dad drove from Goodyear, Arizona, 25 miles west of Phoenix, to Charlotte for my oldest nephew's wedding. I couldn't get time off. My dad calls me Thursday before the wedding and says, don't change my flight. My mom's in the emergency room. He doesn't know what's wrong. Still come in at 7:20 on October 27th, on the wedding day. He'll meet me at the airport. I take a red eye from Phoenix to Charlotte, get off the plane. I have a backpack because I'm only going to be on the ground for less than 48 hours. My nephew is getting married. His younger brother and my dad met me outside of TSA. We went to IHOP, like family tradition. The two boys go back to the house. My dad takes me to the hospital to see my mom, and I walked in on the priest giving my mom last rites. I wasn't ready for that. Unfortunately, she had septic of the blood. It got into her pacemaker. She was on the ventilator. They had to do open heart surgery, take out her old pacemaker, put in a new pacemaker. She was on the ventilator for 13 months, in a hospital for 15 months. My dad stayed in the Charlotte area, visiting her every day in the hospital. So I purposely, in July of 2020, bought a bank-owned property in Rocky Mount, North Carolina for $20,000. So I could write off on my taxes when I went to go visit my mom. I had to wait 13 months because of COVID restrictions. It didn't go to auction until August 28th of 2021, and the final bid was $64,326. Woo-hoo! Without lifting a hammer, I got to make $44,326 in profits. But more importantly, at 24% tax bracket, I saved $10,368.24. Don't forget that 24 cents. In capital gains. I use that money to put it back into more real estate. This is the power of the Beneficial Spendthrift Trust. So the 5 taxes you're going to save with the Beneficial Trust. You're going to save short-term and long-term capital gains. I have a slide for long-term capital gains in just a minute, but short-term capital gains are the same as federal income taxes. Short-term capital gains affect you when you wholesale, fix and flip, do auction houses, tax liens, you sell crypto. I don't care if you bought Bitcoin in 2017 and you're selling it in 2027, it's still short-term capital gains. The federal government makes more money on it. Your options trading, and if you're a forex investor, interest income taxes are just like federal income taxes and affect you when you're a passive investor, you're in mutual funds, you're in a REIT, you're doing subject to real estate, you're doing the Brewer strategy. I have notes from the paper to the house. People pay me their mortgage, creative financing, seller financing, or forex investors. Yes, forex investors, you get double tax. You really need the Beneficial Spendthrift Trust. You'll stop paying dividend income taxes if you are in the stock market. Maybe you're doing options trading or anything else. You could be saving taxes on that too. You'll stop paying rental income taxes, and then you'll also save on royalty income taxes. They're taxed a little bit less. They're taxed at 7 different layers, but you'll get to save in case you're an actor, an actress, a musician. Maybe you have NFTs, an author, an artist. You have copyrights, patents, or intellectual property. Robin Williams, the late great actor, had the Beneficial Spendthrift Trust. Yes, unfortunately, he committed suicide, but his 3 adult children paid no royalties on any of his works. This slide is just to show you if you make $50,000 in profits or $100,000 in profits, how much you would save depending on your tax bracket. Personally, since I started my trust, I have wholesaled 28 properties, paid zero in taxes. I have apartment buildings that I didn't have to pay any taxes on that. Now, the New York subject is going to be interest income taxes, where I got to save $145,000. I got to save $34,000 with no interest in taxes. It's an amazing thing. Now, with long-term capital gains, I work with a lot of business brokers because they have my ideal customers. People who are selling their businesses and the people who are buying their businesses. Selling, they want to save the capital gains. Buying the business, they don't want to pay federal and state income taxes. So I got the business broker made $2,000 on this deal because I got both clients. This HVAC company was started in Georgia at their kitchen table. The husband and wife, they were selling it with 12 trucks for $1.7 million. On April 15th of 2024, at 15%, he got to save $255,000 in long-term capital gains, or 20%, $340,000 in long-term capital gains. I'm not a CPA. I told him the two numbers, and I said, whatever happens. The wife knew about the trust, and she goes, what can we use this money for? And like, anything you want. And she's just like, we're going to be moving out of Georgia down to Alabama. I said, that's your choice. Now, IRMA. This is income-related adjustable amount. If you make too much money, every October, the IRS goes back 2 years to check 1040 taxes to make sure you're not making too much money. They're going to add everything together, your Social Security, your pensions, your wages, 401k withdrawals, SEP withdrawals, capital gains, interest income taxes, dividend income taxes, rental income taxes, and royalties all together. These are 2025 numbers. Unfortunately, they don't have 2026 just yet. I know we're in April, but either you file married jointly or individual. At individual, if you make $106,000 or less, or if you're married and make $212,000 or more, there's different layers. One of my clients, a husband and wife, that I got to save them $72,000 in dividend income taxes. The husband was not aware of IRMA charges. The wife said, oh, we're paying over $800 a piece. I was able to get them down to $185 each per month. Can't take that away. But I got to save them an extra $1,200 per month because they're no longer paying the IRMA surcharges. Now, if you would like to set up a 30-minute tax breakthrough session with me, I will take you out to NerdWallet, show you the formula for how much you're saving. And then I also have a free class on the Great Discovery. If you go to sallygimmon.com, you're going to get a lecture just like this, and you're going to get 3 articles from Forbes magazine and 2 pages of case law. I want to make sure I can help as many U.S. investors, U.S. Business owners, U.S. franchisee owners, U.S. Entrepreneurs, and franchisee owners save as much money as they can in taxes. Again, the Benson Financial Trust was started, 5 different trusts, by Paul Benson, a Harvard law professor. And in 78 years, not a single trust has ever been audited. His grandson and great-grandson now run the law firm, and they stand behind this. If you get questioned by the IRS, they will defend you free of charge. I'll be honest, in 78 years, it's happened once, one time only, and the trust was approved. The senior IRS agent went down to Houston where the law firm is, approved the trust, then he retired from the IRS, and then he started selling the trust on his own. He went through his Rolodex and made buku money. Thank you for watching my video. If I can help you save taxes, please set up a free 30-minute tax breakthrough with me so you can start saving taxes. Have a beautiful week and take care.